Good morning, everybody. This is morning time in Hong Kong, and I want to update my analysis on the US American market. This is SPX, and I look at a chart from the chart stock, from the stockchart.com. These are the traditional indicators they provided, and you can see that there's nothing special, and then they're very hard to predict because the RSI is not overbought or oversold, and the MACD also flat, and it's very difficult to know what is the next step. But there are many other hidden tools that not so many people are aware of that can give you a much better picture. Now, all in all, let's look at that also two very traditional indicators, so-called 200 days moving average, and that means that any price below it is still bearish and above it is bullish. But that is also not very clear at the moment because it's also basically flat. But if you look at the very old tool, so-called point and figure, you can clearly see that the long bar of the X bar, that means the bullishness, is now reverted. And it's still reverted at zero, at all. And it means that in this case, we could only regard it as a bearish because unless it's reverted back, otherwise, there is a better chance of going down, okay? And can also see the resistance line here. And this means that not so easy to go up. And can possibly fill for that long X bar here, return somewhere here. Okay, that is the beauty of point and figure. It filters off all the noises, all the unnecessary waves, and can see the real trend. That's one thing. And now we can go back to the original chart, and there is also very interesting indicator, a so-called price, volume by price, that not so many people are aware of. Normally we look at the volume here. Also we can see the result of, even for that kind of volume, you see that declining and the prices is actually not moving quick, and means that there is a better tendency of going down. And there's volume by price, which means that most we can tell you where has been the most accumulated area by price, and that should be this kind of area. This means that even though the price may go up a bit, but when it hit that will be a huge resistance. That is very easy to understand. Suppose that maybe before that I turn to the weekly chart to show another picture. This means over the years, over the 2 years or something, and then most of the people have entered their stocks, have bought their stocks at around this price. During in the March, when there was a huge drop, there will be a lot of pain for those people. And now the price returned to this level. Do you think that they will still keep it? I think a lot of them will have sold it just for safety because they have been scared a lot already. So that's a huge resistance. And so this area is a huge resistance for any price to go any further. And it is like a bell shape. This means that by normal distribution, this means most or like the price will oscillate around this region. So when it will retrace back here and before moving up, it is also very normal. Okay, and when I back to, and also we can look at the so-called BPI index. And there are several of them. I will choose the Dow Jones Industrial Average. There's also not so many people aware of this kind of analysis. This looks terrible. This means that in March there's a huge down and up, and you can turn it back to without the log scale. It's now much more clear. BPI stands for the Bullish Percent Index, which means how many of the stocks that have turned their point and figure chart direction from X to O and O to X. Just now here you can see very clear that many stocks in America has been turned bearish, very bearish, between February and March, and then in the middle of March it suddenly turned very bullish. And now actually, and now it's still bullish, but the bullishness already dropped, and now it's something 73. Okay, that means that it's not so optimistic as before. It had already dropped. Therefore, this means that if you imagine, as Mr. Doshi said, that if you imagine each stock has a vote, not so many people are actually voting as very bullish already, and many of them have turned down. And although there's some rebound, but there's also out of steam. Okay. And many people may think that I'm still abusing guesswork and also have the opinion, a fixed belief that it will go down. Last but not least, let's look at a cost report that's analyzed by this website Trading Store. We can see that the non-commercial have much more short positions than long, and non-commercials are those guys that we wish to follow because they are the smart money, the hedging fund, and the institutions, etc. Commercial are mostly the banks, and they have more long position than short, but they are not aiming at earning from speculating the market. They actually buying the stocks or selling the stocks as a kind of hedge. So normally they're just the opposite to what we have to follow. When they're more short, then we will buy long, but if they're more long, we are going to short the market. So also we can have to look at a chart that can see that the non-commercial that we wish to follow actually is going down. It means that we expect the market to be bearish in the near future because they have a lot of short transaction opening, and we can see from those open interest. Okay. I'm not a very good expert in these, but I only know the general concept of this court report, and the top expert I would suggest is Mr. Larry Williams, and he knows this very much. And I also met him once in Hong Kong, and he conducted a very good seminar, and I learned a lot from him. Okay, thank you very much for everybody who listened to this audio, this video, and I hope to keep my eye on that American market and keep what's going on. Now it's really boring because it's sideways, and I hope that will be a kind of breakthrough, either going down or going up, then we can see a much clearer trend. But in the meantime, I still bet it will go down. Okay, thank you very much, and see you next time.